Hello and welcome to my channel. In today's video, we are going to deal with embezzlement in the financial institutions. When we talk about financial institutions, we are talking about institutions that have been licensed by the central bank to accept deposit, and they include banks and circles, or that is involved in the business of accepting deposit and loaning money. What is embezzlement? Embezzlement is simply stealing of the resources of the finances that have been entrusted to you. It is mostly perpetuated by individuals holding the fiduciary roles or role of trust. And this can be the top management or people who control finances have the power to withdraw and accept a deposit in the financial institution. And in most cases, these are mostly individuals in the high position like CEOs and the CFOs or the accountants. Embezzlement is one of the key reasons why major financial institutions collapse, because they tend to misuse the funds that have been entrusted to them by the members. Okay, and one of the embezzlement schemes include one use of suspense account. Suspense account is basically an account known debit and credit are stored temporarily before they are transferred to their respective or actual accounts. Now, for example, there are people who have made a deposit in a financial institution, and maybe they have deposited in their own account, or maybe they have someone has paid through the bank account and he has paid an extra amount. Where does this money go? Since that the bank does not own that money, and that money cannot be deposited in another account. That money is mostly stored in suspense account, and there are various suspense accounts that the financial institution can have, and one includes loan in process and cash in transit or refund accounts. When the money is stored in this account for a very long time, the individuals who control this account can embezzle those funds, because technically those finances do not belong to the bank, and no one will be looking for them. Second one is unauthorized transfer. Another unauthorized transfer can occur in three ways. One, where the individuals use the bank's cash to pay for personal expenses. Another one is where the bosses or the individual controlling the institution order the transfer of funds to account they control without recording them. Another one is where individual use fictitious account or the account that they control to move funds from the institution. Another common one is approval of fraudulent documents in application of loans. For example, individuals who approve the loans, they allow individuals to use fictitious documents that, for example, if it is appraisal document, they know the assets are poorly appraised, or for example, even that asset do not exist, or those individuals, the identity that they are using is non-existent. So in case you want to trace those individuals, you want to claim from those individuals, those funds are completely untraceable. Another common one is stealing from customers' dormant account. For example, if your account has been dormant for a very long time, the individuals working in the financial institution can scheme these funds in this account because no one is looking at them. However, there's measures that the financial institution have instituted to ensure that the dormant account require manual withdrawals. Another method is skimming irregular receivable. What are irregular receivable? Irregular receivable are those receivables that are unpredictable. For example, a loan has been declared as non-performing, or maybe the client has taken so long to repay. When that loan is paid, since it has been cleared, the individuals who control this account, they simply don't record the repayment and embezzle that fund. Another one is misuse of collateral. These are documents or asset that has been placed as collateral. For example, if it is a motor vehicle that has been placed as a collateral, they use the same collateral to obtain another loan, or they steal those documents and sell those collateral without the approval of the individuals owning those assets. So that even when the loan is repaid, that asset, the original document proving ownership, cannot be traced. Another one is common is entry or fictitious expenditures. Another one is false entries. For example, they enter non-existent transaction in the financial records. Another one, misuse of system. For example, they use another person's login details, then they use those details to scheme and steal funds in the financial institutions. The last one is loans with kickbacks. Individuals who are at position of approving loans, they demand kickbacks for individuals seeking loans so that they can approve or process the loan. As a forensic auditor, there are various methods that you can use to detect some of these schemes. One is an examination of source documents. If source documents are missing, or they are out of sequence, or they are clear indication of alteration, or for example they are photocopies, that is a clear indication of embezzlement scheme. If there is duplicate document that, for example, identical document proving different transactions, okay? For example, one document that is identical to another is used either to as a source document for two distinct and different transactions. It may point or direct to embezzlement scheme. Another one is if there is any, for example, vendor account that matches the employee's details or their relatives. That is a clear indication of an embezzlement scheme. Another one is analysis of financial records, mostly the income statement or the statement of financial position. And in income statement, the following things can indicate an embezzlement scheme. One is abnormal increase in account receivable. If there is too much increase in reconciling items, it may point to embezzlement. And these reconciling items may be bad debts or non-performing loans. Another one is excessive voids or credits. Another clear indication of embezzlement scheme is where the master account do not equal the total sum of individual accounts. That is, the total amount that is held by the financial institution do not match the actual balances in the total accounts owned by individual members. That is a clear indication of an embezzlement scheme. Those are some of the ways in which embezzlement schemes can be perpetuated in a financial institution. I hope you'll do everything in your power to prevent this embezzlement scheme or protect yourself from this embezzlement scheme as an individual or as an institution. Because this embezzlement scheme are the key reason why major financial institutions have collapsed and a lot of suffering to the members. So, and until next time, goodbye.